So in today's live stream, the first thing we're going to start by looking at the dollar index, what the dollar is doing, and the key levels to anticipate to take trade entries on either the USD XXX pairs or the XXX USD pairs. So looking at the dollar, my key level still remains the same. This is my drawn liquidity where I'm anticipating for price to gravitate into. We talked about this inefficiency on Monday, and look what price has done to the inefficiency. We came down into it very nicely and rejected off that position, and we saw this expansion on the smaller time frame. You can see on 4-hour time frame, we saw an expansion after price mitigated that position. And the reason why I wanted to see this kind of rejection of this position, the first one was because of the daily inefficiency. Right there, there's a daily inefficiency. The second reason was because there's a 4-hour inefficiency, and also this high that created this low, and then we saw an expansion. This high right here was also another key level I was anticipating to act as a support level and potentially take price to the upside. So I'm also going to look at GJ as well. And so as you can see, after we mitigated this position, we saw this impulse move to the upside. We'll go to the 1-hour time frame. And on the 1-hour time frame, we can see clear as day, price created a high, a low, break of structure. So even though I'm still bullish and I want to see higher price on the dollar for the week, I wouldn't be surprised to see the dollar revisit this key level in here. If we're going to keep going to the upside, then right here would be another key level to act as support before we continue to the upside, because potentially I'm still looking forward for the dollar to come into this position. So this remains my drawn liquidity. And once we're in there, I'm going to be watching it closely to see whether price is going to continue higher to run the buy side liquidity, most likely mitigates the extreme premium inefficiency, bodies of the candle. So that is what I'm looking forward to see on the dollar. So we're going to look at the XXX USD pairs, and we're also going to look at the USD card as well. So for the dollar, for euro, I was actually looking at this trade entry right here on euro this morning, but I just didn't like it so much. That's why I didn't really put it out there to the members. And the reason I didn't like the trade so much, it doesn't mean that it's not going to play out, but the reason I didn't like it so much was, firstly, was because I want to see price come down a little bit lower into this key level to run this low resistance liquidity before I now start looking for buys. But for some reason, after we came to the downside, mitigated this position right here. This was the last down close candle. So if you're someone who like to take scalp trades, I'm going to show you how you could have gotten a scalp trade entry right here. So basically, after we came to this position, you can use 30 minutes break of structure. From the downside right here, we'll have a high, a low. Right here would have been the break of structure. After this break of structure, the next thing you'll be looking out to see is this last down close candle before an expansion is your key level. You mark that out, and then you wait for price to visit that position. And right here, you can see we visited that position. The moment we visit it, you want to see a 4 minutes break of structure. We'll have a high, we'll have a low, and then we broke structure. After we broke structure, you can see that we left this inefficiency right here. So we left an inefficiency right here. This inefficiency would have acted as a beautiful area to get entry positions, stop loss resting right here. So right now you would have been in a beautiful, this is literally a 1:10 risk to reward ratio, which is amazing. And as much as I don't really like taking this kind of trades, but as you can see, my strategy actually works with it as well. And the reason I never like to take this kind of trade is not because it's not going to play out, but it's just, in my opinion, I see it as low probability. And it does play out. I've seen it play out a lot of the time. Like this, for example, if you were on this trade, you can literally even close right now and still be in good profits. Like from here, this is literally a 1:3.4. If you close the trade right here, you'll be leaving the market with good profit, But if I was to be on this trade, my take profits will be somewhere probably around this high, or I'll just try and be conservative and leave right here this inefficiency. That'll be the best place for me to get out. And the reason I'm using this is because we have a low, we have a high, we have a break of structure. After this break of structure, this would be the most likely position that price will want to revisit if it wants to keep going to the downside right here. Bodies of the candle. I'm always interested in the bodies of the candle. I think you must have noticed that as well. Bodies of the candle. But in as much as this is where I'm anticipating for price to come into, my take profit is not going to be there. It's going to be at the low hanging fruit, which is this inefficiency resting right here. That will be the easiest target. Price will smash through. And now that's a 1:7.32. What I do next is to reduce it to 1:7 risk to reward ratio. The reason for that is so that before it gets into the inefficiency, I want to be out of the markets. Because slippage, anything can happen. Your broker can decide not to allow it to mitigate this place and then reverse, wiping out literally 70% of your profit. Most likely it's still gonna continue upwards, but just that drawdown just puts you in a very bad mindset. So I try as much as possible not to put myself in that kind of position. But it's still not something that is possible all the time. Sometimes we're gonna see a retracement, deep retracement, literally even come back into your entry. Like we saw that on Monday, we got into a beautiful trade that would have made us a 1:7 risk to reward profit. For some reason, price went up to 1:3, reversed, came to our entry because we trade stop loss to break even, took us out, and then went straight to take profit. So it happens. That's why sometimes the best thing to do is when price has taken you into profit of like 1:3, instead of breaking even, take 50% of the position, take the profit. So it's still kind of like you're breaking even, because if the market reverses and takes you out, you're not going to take a loss, because the 50% of the 1:3 that you've taken is literally taken. So let's say you risk 1% and price goes into a 1:3 profit, and you took 1.5%, which is 50% of 3% profit. If price reverses and takes you out, you're going to lose 1%. And then if you add the 1.5% profits that you already taken, you see that you're leaving the market with 0.5% profit, because the 1% profit, 1.5% profit you took out when we were in 1.3%, when we were in 3% profit, it now adds up, mitigates the 1% loss. So rather than trailing stop loss to break even, that's also a better option. So you can still be on the trade. So I think moving forward, we're going to focus on doing that instead, rather than closing or trailing stop loss to break even early. So for us to trail stop loss to break even, it's going to mean that come we see price break a significant 1 hour high. So for example, we'll have a high, a low, and if we went on this trade and we wanted to trade stop loss to break even, we'll trade stop loss once we see that this high, this 1 hour high right here. Once we see price break that high and close above it. So once we see a 1 hour high broken and price closes above it, then we can move stop loss to break even. But if we do not see that, we just have to be on the sidelines and watch and see price do its thing. So beautiful trade in euro. Unfortunately, we didn't get in on it, but a beautiful trade. Charlie sent out this morning on GBP/USD. I believe it's in profit for anyone who got into that trade. It's supposed to be in profit. I'm still anticipating to see higher prices on GBP/USD, in as much as I still have my overall target on GBP/USD being this inefficiency, low resistance liquidity. On the monthly, we'll have inefficiency. On the weekly, we'll have low resistance liquidity. And on the daily, we'll have low resistance liquidity. And on 4 hour time frame, low resistance liquidity, low resistance liquidity. So I wouldn't be surprised to see price come to the downside, but in the meantime, I want to see price mitigate either an equilibrium or a premium zone before we potentially continue lower. So that is the reason why I'm still looking forward to see the euro go to the upside, potentially this buy side liquidity. You can see this key level I outlined on Monday. We mitigated it and we dropped down, breaking structure. So if I was looking for a sell, this would have been me looking for a sell from here. But because I don't really like the price action, number one, because we didn't mitigate the equilibrium or tap into a premium. Number two, we didn't take any liquidity before we broke structure. I like to see liquidity get taken before a break of structure. Because if you start back testing, you will see that each time price went to the downside, there was a run on liquidity before a break. For example, right here, this is liquidity. We took liquidity right here. We're just gonna back test this, and you can see that literally almost every time we see a drop, price rallied, took liquidity, dropped, rallied, took liquidity, dropped, rallied, took liquidity, dropped, rallied, took liquidity from here, dropped. Even here, high, low, high, took liquidity again, took liquidity, dropped. So every single high takes liquidity before a drop. You can literally see that. And every single low takes liquidity before a drop. And if we even go from this overall high right here, you can see that we took liquidity from here, took liquidity, dropped. You can see right here, we took liquidity from here, dropped. You can see right here, we took liquidity from here, took liquidity, dropped. Right here, took liquidity, dropped. Every single time. Before a high is created, we take liquidity. Before price tops out to create an overall high, it takes liquidity, drops. And that is why I'm not really interested in what Euro US dollar is doing right here. That is why I'm not looking for any sells right here. And as much as you can see, I wrote wait for 15 minutes break of structure. And the reason is simple, because there wasn't any run on liquidity. Price didn't take any liquidity before it dropped. That is why when we came into this position, it created an opportunity to buy, because this here is liquidity. So I wouldn't be surprised to see price rally above this high, take this liquidity. And if we take this liquidity and then I see a break of structure to the downside, I'm looking for sales on euro and I'm selling it to run these lows, because this is low resistance liquidity. Another low resistance liquidity created here as well. And this is kind of a trade that could potentially play out, maybe because we're going into a holiday. So if it doesn't play out, if we don't take this high and then see the shift in market structure between on Thursday, then it means it's gonna be till next week. So, but I'm gonna be watching this very closely, and if I do see that trade play out, even if it's during the holiday, I'm gonna take it, and I'm gonna share that with you all as well. Anyone who's interested, you can take the trade if you want. If you don't like it, if you don't want to trade during the holiday, that's fine. For me, trading is just, it's like a part of my life, and whenever I see a good setup, I just take it on my personal account. So looking at USD card as well. So for USD card, you can see this is my key level. Why is it my key level? On the daily, we have our inefficiency resting right there, and we mitigated it. All we want to see is the 30 minutes break of structure. And right here, price created a high. We created a high, created a low, broke structure. This was the last impulse move to the downside. So we just have that outline from the bodies of the candle. So I personally wouldn't take this trade, and the reason I wouldn't take it is because I don't like it, and I'm still gonna explain why I don't like the trade as well. So the reason I don't like this trade is because after we broke structure, we mitigated this daily inefficiency. I wanted to see price at least mitigate, even if it's this candle, this equilibrium line, even if it's just a tap, to tap into that equilibrium or mitigate the discount position. I just need, even if it's one pip into it, that'll be phenomenal. And if I do see a one pip into it and then we'll break 30 minutes high, I'll be very, very interested in buying this. But because I didn't see that, I wouldn't buy this yet. It can continue going to the upside, but I wouldn't buy it. And also look at what it came into. It came to the upside, mitigated this inefficiency, took liquidity. So this is another reason why you just need to be careful. Not all trades that mitigates your point of interest is gonna work, because it mitigated my point of interest, broke structure, and then went straight into an inefficiency, took buy side liquidity. Taking this buy side liquidity, and we could potentially even drop taking this low, and that would be a 30 minutes break of structure for price to retest and continue lower to run this sell side. That's 100% possible. Like I was saying previously on Euro, before price makes a high, it hunts for liquidity. And you can basically see that right here. Liquidity, we took a high, we went to the upside, took liquidity from the high, and then we saw this displacement to the downside. So I wouldn't be surprised for price to displace into this position and just keep going lower. That's 100% possible. We could literally keep going lower. If here doesn't hold and take us to the upside, then this low will be the next draw on liquidity. But personally, for me to engage in USD card, I want to see price mitigate this red line. If I do see that happen, then I'll be looking for buys on USD card. So let's take a look at gold. The trade idea was sent out on gold this morning. Traders in profit for the people who got in on the trade. Hopefully this plays out a 1:5 risk reward ratio. So right there is our take profit, low resistance liquidity. I'm also going to share with you my analysis, reason why I was anticipating for buys on gold at that key level. I'm going to wipe my chart. So from the weekly time frame, first thing I was looking at was the inefficiency on the weekly. After we mitigated it, I wanted to see a 1 hour break of structure. And then right here, you can see we broke structure. After break of structure, the last down close candle, bodies of the candle is my interest. Right here, after we mitigated it, the next thing I would like to see, you can basically see even on the 1 hour time frame after we mitigated this position, we created a high, a low, broke structure. Right there, you can see the break of structure. But what I wanted to see overall from that key level was a 5 minutes break of structure. And what makes it even nicer is the fact that after we broke 5 minutes high, this right here is a swing high, swing low on 5 minutes time frame. So for a key level to be high probability, I want to see a solid break of the swing high on 5 minutes. And right here is my swing high, swing low on 5 minutes time frame. And the moment price violated that position, I go to 1 hour time frame and I'm looking for the last down close candle. And right here, this was the last down close candle before an expansion that broke that swing high. And that is my point of interest. And I'm waiting for the very same thing, 5 minutes break of structure from that key level. And right there, after we mitigated that position, we created a high, a low. This is my high. And as you can see, it was really a very choppy price action. At some point, I just started being very uninterested in the trade because of how choppy it was. I just felt like, what is going on here? But the bottom line is, no matter how choppy price action is, if you see a break of structure, mark your key levels and put some alerts on it and move on with your day. If it works, it works. It doesn't work, it doesn't work. It's not the end of the world. So basically, after this break of structure right here, I was watching this key level because this was the last down close candles, took liquidity before breaking that structure. So all I did was to just basically put a line at the bodies of the candle, and that's my accumulation zone. Each time price comes in there, I'm looking for buy. That's it. That was the reason why the entry is just right there. Stop loss, the overall low. Because this trade idea right here was actually, this trade right here was playing out in the evening, in the night, I mean. So I just I just didn't know the exact point price is going to want to retrace into. And in order not to try to act like, in order not to act like you know what price is going to do all the time, one of the things to do is just mark a significant zone, a realistic key level, and use that as your entry. And right here, this right here was yesterday evening. I thought this trade was going to play out yesterday. I was literally waiting for this trade to play out, literally waiting at the office to see if I'm going to enter this trade yesterday. But eventually, the day ended and it still didn't break this structure. It was really weird how we took so much time playing around, coming very close. This is just a 5 minutes high that could literally take 5 minutes for price to break the high. But you can see how long it took for price to break the high after we created the low. So right here, it took about 7 hours, 55 minutes, literally 8 hours. It took 8 hours for price to break a 5 minute high, a high that could literally be broken in with just one 5 minute candle. It took 8 hours to break that high and 83 candles. So this is to show you the level of manipulation in the marketplace. And sometimes you just have to be patient. And if it doesn't work out how you want it to work out, it's still okay. Just focus on using the same strategy 1,000 times. Like Bruce Lee said, he's scared of someone who's practiced one kick 1,000 times than someone who's practiced 1,000 kicks once. Because when you do things over and over and over again, you become so confident doing that. That's how you breed that confidence in you to use that strategy. So even when it doesn't work, you just can't be bothered because today is not just the day for it to work, but eventually you're going to be profitable at the end of the day. And so this right here was my stop loss position. Entry right here, you can see how beautiful price tapped into the entry. So no matter where your entry is, as long as you put your entry right here, whatever broker you're using, you're definitely going to get activated. And like I said, before we anticipate for a reversal, we want to see a run on liquidity. And look what we have here. Run on liquidity, expansion. So as long as this inefficiency doesn't act as resistance to send us to the downside, as long as it doesn't act as resistance to send us to the downside, I don't really see any reason why we wouldn't see an expansion to the upside for price to blast through this high, because just this high alone is a 1:3.4. And another key level to also look at is if we go to 1 hour time frame, you can see on 30 minutes time frame, this right here is my take profit position, low resistance liquidity. So right there is my take profit position. I'm anticipating for price to rally above this key level, smash through that position. So right there is my exit, but it's a 1:5.48. But what I'm just gonna do is I'm gonna be watching it as a 1:5. Once we hit a 1:5 take profit, I'm most likely gonna close the position because I'm very much satisfied with 1:5 risk to reward ratio. I don't want to be greedy. I just want to take what the market gives me for the week and call it a day. And next week we'll go again. And if we do still see any good position on maybe euro or gold as well, we're still gonna share that with the members as well. So if you do have any question based off this analysis, feel free to drop it in the chat. I'm gonna be there to answer you. So everyone is in nice profit so far. We're gonna be waiting patiently on this one until we see a significant 1 hour break of structure. We're not gonna trail our stop loss to break even. The only thing we can do is if price rallies into a nice profit, for example, if we rally into key levels like this position right here. So we're going to outline the key levels that could act as resistance. This right here is one position, and this right here is another position. So I'll be watching it closely. When we come there and I see any sort of significant rejection from those key levels, then maybe we just take some profit, even if it's 10% of the profits, 20%, 30%, just secure that and keep it on the side while watching to see if we're going to keep going to the upside. If we keep going to the upside, fantastic. Personally, I still want to see price continue higher. But at the end of the day, every trade is a probability and no trade is a certainty. So I appreciate you all for tuning in. And if you do have any questions, feel free to drop it in the charts. I'll talk to you in the next live stream. Have an amazing day, everyone.